Money, Money, Money Insurance Special, co-presented by Exide Life Insurance.
Hello and welcome to Money, Money, Money. I'm Sumaira Abdi. We've been dealing with all aspects of insurance over the last few weeks, and this week we focus on home and motor insurance. There's already quite a bit of awareness of these forms of insurance, but as with everything else, there are still aspects which are not very widely known, and it's exactly these aspects that we're discussing with Hemant Rustagi of Wiseinvest Advisors. Hemant, thanks very much for being our guide this week. Let's start with home insurance, because over there, while there may be a lot of information in the public domain, participation still remains low, right? So what are the types of home insurance policies that one should take? I mean, what is applicable for whom? I know that there's a standard policy which is fire and all perils associated. Should one also be taking on policies against burglary, theft, etc.?
Well, Sumana, I totally agree with you. The home insurance is absolutely important because let's not forget that this is our single biggest investment that we make, and also it provides security to our family. So it's very, very important that we insure this property that we build. See, there are broadly two types of policies which are available. One is the basic, which covers the fire risk from the fire. It covers both. One, the structure of the house, and the second, whatever the contents are there within. Then there is a comprehensive policy, which of course covers the risks that you can face from fire. In addition to that, there are many other risks that are covered in the comprehensive policy. Okay, there could be risk from burglary, right? There could be mechanical or electrical failure or breakdown of the instrument things that you use at home. Then there is an all risk cover policy. Then there could be public liability, right? Then there's a plate glass insurance, which is basically the fixed glasses that you have. So the whole lot of things are covered in that. I think it actually makes sense to go for a comprehensive policy, because it's not that only you need to protect the structure of the house, it's also the things that are kept within. And let's not forget that we spend a lot of money acquiring those things over a period of time. So I think it's important that we also ensure that they are safe. And in case of any damage, it could be fire, or it could be storm, or it could be flood, that we can reinstate them the way they were before the damage happened.
Okay, so in that case, how does one decide what is a good sum assured? I mean, should it be based on the market value, or should it be on the reinstatement value?
I think that's a very important question. What we need to understand here is, when we talk about market value, what is it we're talking about? It's not the current market value. It's the market value. It takes into account the depreciation depending on the age of the asset. So what you get is the depreciated value. When you talk about reinstatement, it's basically reinstate at the current price. So it's always advisable that you go for a reinstatement value, because then you know that whatever money you're going to be spending on reinstating those assets, you will get that. So it's always makes sense to go with reinstatement value.
And naturally, that would be the more expensive one too.
Obviously, I mean, if you really want a higher cover, you have to pay that much extra. But I think it makes sense. I mean, if you really see home insurance, even the comprehensive policy is not that expensive, considering the fact that these are very, very important assets that we acquire in our lifetime.
Okay, what about something like protection against burglary? I mean, I know I spoke to quite a few insurers who actually provide H&I insurance against valuables, jewelry, etc. And they always say it's very difficult to actually decide on what should be the sum assured, because these are things which don't have an inherent value as such, right? Antiques, for instance, furniture. How does one come about on what should be the consensus on that?
See, it depends on the items which are there in the house. I agree that when you're talking about antiques and all, there could be an issue. But like we mentioned earlier, when we're talking about a comprehensive policy, it covers a whole lot of damages. And there, it's very important, two factors that need to look at. One is that we talked about, if reinstatement value, you need to make sure that you are actually, giving the right value to those assets that you have at home, which means that you're not actually exaggerating the values there. At the same time, make sure that you're not under-insuring. Because the moment you do that, if it is less than 85% of the value, then it is taken that, you want to cover the insurance yourself a part of the assets. So you need to be very clear on that. In terms of antiques, clearly the valuation can be an issue, because it's not something where it's easily available. So if you can get them valued, there are valuers who can value that, and then that is the value that you can use, like you do it for even jewelry. In case of jewelry, again, you get it from an approved valuer, and that is the value that you give it to the insurance company for all the jewelry that you have.
Okay, I heard you say that make sure that the value that you give to your home or the belongings therein should not be excessive. Is it not safer to be a little over-insured?
No, not really. Yeah. Because let's understand there's a basic principle of insurance. You're not supposed to make money out of insurance claim. Okay, so for example, if there is something which is worth 10,000 rupees and you value it 15,000, we earlier talked about reinstatement. When you talk about reinstatement, basically what's happening, they will find out as to what is the price today. So even if you have valued it at 15,000, you're not going to get 15,000. In fact, what will happen is it'll amount in you paying a higher, premium there. So I don't think it really makes sense. It has to be valued at the way the prices.
Yeah, if anything, it could be like a loss-making proposition for the person doing it.
Yes.
Okay, what is the meaning or the relevance of salvage?
Well, I think salvage is very relevant. Okay, it could be partly damaged goods, or it could be a wreckage of an asset or a car, which is settled, where the claim is settled on total loss basis. Now, what happens is, when the claims is settled, okay, the salvage becomes a property of the insurance company. Now, what they usually do is they tell the surveyor to dispose it off. The surveyor, especially who claims the losses there, and the amount so realized is adjusted against the loss. In some cases, what can happen is that if the insurance company may ask you to realize that, they will adjust it against the claim. Otherwise, they adjust it against the loss that they make by settling the claim.
All right. So my other question actually stems more out of curiosity than anything else. What if someone were to change their houses midterm? What happens to the existing policy? And B, if those goods are being transported to the next house, are they covered within that policy, or do you need a new policy altogether?
No, actually, it's a very important question. When you change your house, okay, and you're in the midterm, let's say the policy is for a year, and after 6 months you move house, you go to another house, you can actually continue with the same policy. What you need to do, of course, is to inform the insurance company and get it endorsed. You must ensure that you've been informed, because in case there is a damage, and if you moved from one place to another place, you will find it difficult to get your claim. So it is possible to continue with the same policy. The only thing is you need to inform the insurance company.
And if the value of the house is different?
Well, I think that can change, of course. I'm talking about the contents which are there within.
Okay.
And if of course, value of house is different, then obviously, like I said, the moment you go back to them, you give them all the information, they will rework on that and tell you. Okay. And then basically the thing is that you can continue with the same policy. Okay. If you have to pay more, you have to pay more, depending on what is the value of the house, or what kind of terms and conditions are set for that policy. Okay. As far as covering goods while moving goods from one place to another place, yes, there is a marine cargo policy which you can buy. You can buy either a basic cover, which basically will cover you from the fire kind of insurance, okay, or the other one is all risk cover, which is generally done at an agreed value of the things which are moving from one place to another place. So yes, it is possible that even if you move house, you can continue with the same policy, and also you can cover goods when you're moving from one place to another place.
Okay. And if I sell my house and I'm moving maybe beyond the area of coverage, is it possible that the new owner of that house take on my existing policy midterm?
I don't think that can happen here.
Okay.
Okay. It can happen in other assets. I don't think it can happen in case of house.
Okay, so a home insurance policy is essentially for homeowners. What about people who are on rent? I mean, I understand that they don't have an interest in the house itself, but what about the belongings within?
Well, Samara, as you rightly mentioned, I think one of the basic principles of insurance is that you should have an insurable interest in that. When you are staying in a flat on rent, obviously you don't own it, so you can't cover the structure. But as far as the contents which are there inside the house, because they belong to you, you are owner of that, you can definitely insure them, but you can't insure the structure.
But is it advisable that when one is looking to rent, that they check if the landlord has a home insurance policy?
Well, it makes sense. See, at the end of the day, in your own interest, you should insure your goods which are there. Okay. As far as the structure is concerned, it's for the owner to. Yes, I mean, if you're staying there, if something goes wrong, you will suffer. But that's where I'm saying that you cover your interest by ensuring that all the goods which are kept within are insured.
All right. Finally, what are the common mistakes that a lot of people make? I mean, I know you would have spoken to like hundreds of investors, maybe thousands. What are the common pitfalls that you've generally come across?
One is not thinking that is necessary to insure your home. I think which is obviously not the right thing to do. As I mentioned earlier, it's an important asset. It's the biggest asset that you create. So you must go for insurance. Second is, while deciding what to insure, there is a general tendency not to cover everything. I think it makes sense to cover everything. Also, many people don't go for comprehensive because there are two options. We talked about basic policy, so you cover yourself against fire insurance, and also there is a separate policy that you can take, for the contents which are there within. Advice is always to go for a comprehensive policy, and we also talked about how are you going to value those. So I think you make sure that the value is realistic so that you don't have any problem in settling the claim.
Yeah, fair enough. All right, on that note, we need to take a very quick break. When we return, everything you ever wanted to know about motor insurance. Stay tuned.